So another Forex video today. In this particular video, you'll see the title, 5 reasons why you lose and how to fix. So these are going to be some pretty basic tips, so you might want to write these down or whatever, but I'll put them on screen so you can see what tip I'm up to. But it's going to be a nice quick video just to get you sort of familiar with 5 reasons why you're probably losing. So getting straight into it, tip 1, number 1 reason, we'll call it that. The one reason why you are losing is demo account versus a live account. Now I talked about this a little bit more in depth in my previous video. I don't know when I uploaded it, probably yesterday, where I talked about big reasons why demo accounts don't work. So if you want, I'll give you a basic reason is the live chart does move differently to the demo chart, and that's so brokers can get you to sign up and then lose money with them. But check back my previous video. I'll put the link in the description, I guess, and you can see why demo accounts versus live accounts, there's a big difference there. That's a big reason you'll be losing money if you're trading a demo and then you go to live. So I'll move straight to step 2, so tip 2. So number 2 is risk to reward. Now this is a pretty major one of why you're losing money even if you're winning trades. What most people tend to do is, really stupidly, you put a trade, you let your losses run, and you take your profits short. Now some people who are, I don't know how to say it, kind of stupid, is they say if you don't feel comfortable letting your losses run, it means you're trading too high. Now that doesn't really make much sense because the point of trading is to make money. And if you're just going to be okay with letting your losses run forever, that's obviously not going to make any sort of gains overall. Especially if your profit's that tiny and your loss is that big, how do you expect to make up for it? When it comes to trading, your profit has to be higher than your loss, obviously. How you can guarantee that is risk to reward ratio. The absolute minimum is your profit, so your take profit, should be double what your loss is. And that's a pretty key point. Like I said, some of them don't put stop losses in. That doesn't make sense. They just hope I guess they just hope that their margin takes them out if it goes too far. That doesn't even need to necessarily happen all the time. I'm like, where's the stop loss? How do you guarantee your risk to reward? So I'd say the minimum is 2 to 1. I would more strongly suggest 4 to 1. That's actually a much better figure to deal with. 4 times the profit versus 1 times the loss. If you do have 4 to 1, as you can probably tell, it means 1 win equals 4 losses. So if you lose 4 times and win 1 time over 5 trades, you'll actually be break even. Whereas on your systems that you're probably trading on, if you lose 4 times and win once, there's no point even trading. So you might as well just give up and just turn it off right now. So a big point is risk to reward. If you actually trade on, say, 4 to 1, you should be able to just randomly enter trades blindly, and overall you'll still come out at least break even or possibly even a little bit in profit. I mean, we're talking about being profitable with having no system, no logic whatsoever, just because you take more profit than loss. So that's a pretty major one to look at, is risk to reward. I'll go over that further in depth in some other videos, but in this one I'll just keep going on. So the third thing that you could be losing money on is backtesting. Now again, look at my previous video. I talked a lot about backtesting. People don't do this. They come up with a system based on what's happening right now, and they don't check back the past few months, did it work then? And the people who do that don't check back the past year, did it work then? Because things go, as the trading goes up and down every day, it goes up and down sets of months, sets of years. So you really have to backtest, but I'm not going to go too far in detail on that because I did that in my previous video, so check back on that one. So number 4 is cherry picking. Now, cherry picking is when you backtest, so this is the next step after, when you backtest your trades, because you can see what happened after that trade that have happened, your brain can, the way you sort of think of it is like, all right, I probably wouldn't have taken that trade because it didn't work out for me. And look, this trade did extremely well. Maybe I wouldn't have taken it on my system, but I think I might have taken this on my system because it worked so well. You can't do that because the trading's just numbers. It doesn't give a damn what your feelings are or what you feel about stuff. It's just a number. So you can't lie and you can't go around in circles about it. If you want to test your trades properly, you need to bring the chart right back and look at the very edge of the chart so you can see, make a decision on what you're going to trade on, then move the chart across and see if you're wrong or right. You can't cherry pick trades. You have to be honest with yourself and take every single trade according to your system. Otherwise, you'll never know what works and doesn't work. But yeah, so we'll go into the last step now. So this last step, again, sort of ties into the cherry picking. It's prepare. So prepare to take the trades. So what it means is when you've got your system sorted, you're back tested, and you haven't cherry picked trades, you've taken all the trades honestly, you'll have a certain system set up that allows you to enter a trade without thinking. That's a really important bit. If you have to think before you enter a trade, you're probably going to be wrong. Because again, the trading has no emotions. It's just numbers. You can't be emotional. You can't look at it from any sort of perspective other than logic. It is just, you take your system, you trust in your system, and you see the setup and you just enter. You can't think about it. You have to be able to enter without thinking. And how to do that is to prepare in advance. So you know what your system is, you know what sort of structure that you sort of want to take it on. And so you're fully prepared. Entry comes up, it just enters either with a pre-trade or with you entering on the spot. You can't think about it. It has to be prepared in advance. But yeah, I think that's about it for this video. I've touched on a few tips there. So like I said, the 5 tips, just to go over them again. Demo versus live, you could be losing money on that. You always have to look at the live chart, demo chart literally means absolutely nothing. Number 2, risk versus reward. You have to take a higher reward than a loss. It sounds pretty easy, but people make the mistake all the time. Next one, backtesting. If you don't backtest far enough, you're just cheating yourself. Cherry picking, again, this is even worse. Don't just be like, I wouldn't take this trade, I would take this trade based on how it works. Take them all according to your system. And the last one, prepare. Your system has to be well in place, well prepared, so you can enter without thinking about it. Follow those basic steps, and you should be fairly profitable according to even just a basic understanding, to be honest. You should be at least break even or at least a bit profitable. But this should help you stop losing trades just based on a few very simple things you can pick up. But for now, just a few of these basic tip videos. So I'll see you next time.